What's up, guys? Trevor with Trevor Financial, sporting the new gaming chair. As you see, it's very, very comfortable. Hopefully, I got the volume issue sorted out from last video because I realized that for some reason my volume sounded really, really muffled. Today, we're going to talk about the difference between investing and trading. Um, a lot of the times when I talk to people, and they ask me, how do I get into trading? How do I get into the stock market and everything? And I say, okay, what are your goals? I try and figure out what their goals are before I try and give them any kind of advice because a lot of the times they expect me to like lead the way and tell them how to do it. And really, the market is all about what you want to do and what you're comfortable with. Using somebody else's advice, like to a T, and trying to trade what they trade and do what they do isn't how you will succeed in the market. I mean, that's just setting yourself up for failure because they understand that stock that they're investing in and you don't. So you're basically going out blind, not knowing when to sell, when to buy, and a whole lot of stuff that just won't go your way if you're if you're solely relying on someone else's opinion. So when I talk to them, I bring them in and I'm just like, all right, so what are your goals? And they're like, okay, well, I want to put forth some money and kind of just ride it out and see where it goes. And I'm just like, okay, well, that's not what trading is. And they're like, okay, well, I'm like, what are your length goals? How long do you want this money to be in the market? And they'll say, 2 or 3 years, or oh, I'm just saving up for my retirement, or I'm just trying to keep some money on the afterburner and just get a little bit of money down the road and stuff like that. And see, that's not what I do. That's not what I'm doing. Like when people come to me and say they want to get into the market and do what I do, they don't understand that there's a difference between investing and trading. See, they think that I'm an investor. I am not an investor, like that's dealing with retirement, bonds, and the other stuff, and stocks, obviously. But they're more dealing with duration and health of the stock and all that kind of stuff, and that's not what I do. I'll try and explain to them, okay, hey, I got knowledge on what investing is, obviously, because I'm a trader and I just have to learn more and more every day. But they need to understand that that's not what I do. So, to kind of describe the difference a little bit, I mean, that's basically the gist of what investing is. You're investing for something long term. You're not looking for your profits right then. You're not looking for a return or anything like that. It's basically you're putting your money into it. You check on it every now and then. You forget about it, honestly, in my opinion, because you really don't have to monitor it all day. You don't have to really put forth a lot of effort with it. You do a little bit of research on it. Find one that you're comfortable with, and you invest in it. You put your money into it, and you hope that they continue going on the trend that they're going on that made you want to invest in them. Now, trading is completely different. See, trading happens at a much faster pace. Like trading, you get your money right then, and that's what I'm doing it for because I like the feeling and sensation of being able to get my money right then. It's not like I want to put my money away and then not have it for 2 3 weeks or 2 3 years and then I have to come back and hope that it's here. So I got the three most common forms of trading. You got swing, momentum, and day. I mean that's the three most common methods of trading. So me personally, I'm a day trader. So day trading, typically you hold the stocks for no longer than a day. I mean, it's in the name. You hold the stock for maybe a day, or not even maybe a day. You just hold it for a day, and you sell it at the end of the day. I mean, that's about the only way I can describe it. You go in, you invest, you do your research pre-market, you figure out what you're gonna invest in, you figure out what you're gonna buy, and then you buy it and you sell it where you want to sell it or where you want to buy it. Usually with me, I'm in the market for the first 2 hours of open because that's when it's the most volatile. I make my profits, I get out of it. Most people, they stick around all day, they do a little bit more research, whatever, but it never goes past a day. Now, swing trading is a little bit longer than a day. They hold their stocks for 2 to 3 days, sometimes a week. It depends on how long they want to hold it, hoping that there will be a difference in price from when they bought it to the next day. Now, to me, that is a lot more dangerous because anything can happen overnight and anything can happen post market, pre market. They can affect it. You're playing a huge gamble there, trying to um, ensure that you're getting your money, you're getting your money's worth and the returns that you're looking to have when you're swing trading. And don't get me wrong, there's a lot of benefits of that, a lot of benefits, but it's just not in one of my best interests. And another common one is momentum trading. It's when you're following the trend of the stock. So it's basically You see that they're trending upwards, you're trying to hop in with it, and you're trying to say, okay, since it's going up, I'm gonna hop in, I'm gonna go up with it, problem solved, and then when the trend stops, you sell. I mean, that's basically the way that the market works anyway. So I feel like momentum trading is in all of them, in my personal opinion, because the whole purpose of the market of trading is making profit following the trend of the stock. So whether you're buying long or selling short, you're going with the momentum of the stock, because if the stock is at $8 at 8 o'clock and then it jumps up to $8.30 at 8:05, you're gonna obviously jump on that stock because you're like, okay, well that's obviously trending upward. And if you're trying to sell short and you see that it's at $8 at 8 o'clock and it drops to $7 and 50 cents at 8:05, you're gonna jump on that if you're a short seller. So in a sense, momentum is available, or not available, but within every form of trading. So it's a short video just to kind of give you a quick idea of why investing and trading are different, and how you need to make sure you know what you want to do before you say I want to join the market. Because going into the market saying that I want to learn how to invest, and you're trading, is different than saying I want to go into the market and trade, and actually trading. And not only trading, but knowing which form of trading you're doing, because you don't want to go into the market saying I want to be a day trader, but you don't know how to day trade and you've been swing trading the whole time, or saying I want to day trade, but you're not day trading the right stocks, or you're not investing in the right areas. You need to make sure that before you go into the market and before you say this is what I want to do, you need to make sure that you're 100% certain and 100% know exactly what it is you're going in there to do. Because nothing is worse than trying to go into the market and invest and falling into trading, and vice versa. Because if you don't know the difference, you won't know the harm that's happening while you're doing it. So when you go into it, make sure you understand, okay, this is what day traders do, this is what swing traders do, and this is what momentum traders do. And you say, okay, I know now that I want to be a day trader, because that same day I get my money and I see my percent gains and all of the other good things about day trading. Okay, I want to be a swing trader. That means that I'm going to have to put forth more research into the stock and into the charts and all of this, that I need to make sure that it is the right investment. And then you say, okay, that means I want to be a swing trader or a momentum trader. I need to figure out how to read charts to find out what momentum and what trend they're following. How to figure out which candlesticks are good candlesticks to read, which bullish and bearish are good and bad. You just always have to make sure you know exactly what you're doing before you go in there blind. Because if you go in there as a swing trader and you make one good day trade, you feel like swing trading is that one good day trade, and that is how you deplete your account. So you need to make sure you know exactly what you're doing and exactly what you're getting into before you get into it, because that misconception that trading and investing are the same thing is going to get you messed up in the long run. All right. So that's about all I got for the day. If you like what you see, make sure you drop a subscribe and a like, and stay tuned for future videos.